Welcome to another episode of Hiring and Empowering Solutions. My name is Molly McGrath, and I am the founder of this Office Altering podcast. If you're a first-time listener, welcome. If you're a returning listener, welcome back. As always, you can check us out at www.hiringandempowering.com. So today our guest is Ben McAdam, all the way from Sydney, Australia. Hi, Ben.
Hi, Molly. Thanks for having me.
Thank you for being here and with us today. I'm so excited. We are going to be speaking about how to uncover hidden profit opportunities for small to medium business owners. And as you know, our audience is small to medium-sized law firms and attorneys. So they're going to be really excited about your 5 tips you're going to share with us today. Why don't you go ahead and kind of give us a little bit of your backstory and Ben's business, Profits Collective. We're going to have this in the show notes as well, so you can check him out. Go to his website. He has some amazing downloads and goodies there for you. But give us a little bit of your backstory and how you got into the evolution of your business and your industry.
Sure. So for me, it kind of all started a while back when I was a teenager. I was actually studying music. I was very keen on classical piano playing and all that. And then somebody gave me a copy of Rich Dad, Poor Dad. And that really intrigued me. I mean, some of the things in there didn't really feel realistic, but I really, really loved this idea of a business as opposed to what I saw as like the traditional script of go get a job. And in particular, I liked how businesses could create things out of almost nothing. They could build a team and rally them around a particular vision, and they could help other people through the business as well as their community and the team members. So it really grabbed my attention. And in the book, he said something like, the lawyer and the accountant see everything that happens in the business. And I'm like, great. If I want to learn about business, that's where I'm going. But probably not a lawyer. I thought it's probably easier if I go with the accounting thing, dealing with the money and stuff like that. So that changed my path, and I studied accounting, got a traineeship, internship, worked at a local practice, worked at a bigger practice in the Sydney CBD for a bit, worked inside businesses, not just tax practices filling out forms. I actually worked inside a business and figured out what made it more profitable, what made it painful sometimes. But, like the practical applications of accounting were way more interesting to me than how to fill out a tax form. And then I found out my wife was pregnant, and I thought, well, I'm running out of time to start my own practice. If I want to work for myself and have flexible hours, be there for my daughter when she was born, because at the time I was only intending to have one, but my 4th is due in a couple of weeks now.
Oh, boy. Congratulations.
Thank you. She'll probably be born by the time this comes out, actually. So I decided that if I wanted to have a flexible boss, that needed to be me. So rushed through, hurriedly got the last bit of registrations and qualifications, started a tax practice, started a bookkeeping business with a partner. Both of them I sold. And then I've been doing this profits coaching, kind of a strategic accounting finance / business coach meld. I've been doing that for quite a few years now.
Wow. So tell us a little bit about how, so you obviously, you've seen it firsthand in regards to how to focus on the profit, which very, very few entrepreneurs, business owners, and law firms in particular. I don't know if you know this, but what attorneys have been telling me for 25 years, they teach you how to be an amazing solutions finder, to be an amazing attorney in law school, but they teach you absolutely nothing about running a business. They definitely do not teach you about numbers, and they definitely do not teach you about profit. And I know you're going to share some 5 of your really hidden profit opportunities for small law firms, small to medium law firms in particular today. But, Speak to us a little bit about kind of how you really understood and grew a business out of profits, number one, but number two, knowing your numbers, so to speak, how to really have that front and center in all every day and within your decision making as an entrepreneur.
Sure. Yeah. So I definitely empathize with the lack of teaching about running a business. I mean, even throughout my business accounting degree, it was, how to be a cog in a big corporate business was most of the thing. Like I had to take marketing units, I had to take a couple of law units, and none of that was really focused on running a small to medium business. And I found the same for just about every professional occupation that I've come across so far. So, like medical professionals, lawyers, accountants, it's definitely not stressed. There's a lot of emphasis put on doing the job right, giving the right advice. We're all constrained by regulations and things we can and can't say. And that ends up taking most of our brain space. And then there's no time for thinking or no time for someone to train you on how to run a business and make it profitable. For me, I tend to find also that some people have this allergy to the numbers. Like it's either something they don't like, it's either something they don't like thinking about, or they don't want to think about, or they're too busy and they put it in a corner and they hope that their tax accountant or their bookkeeper is going to do something sensible or let them know when things don't look so good. But often that's not the case unless you have a good accountant and bookkeeper and you actually ask them. Usually there's no one that's kind of going to look after those numbers for you. So having that realization about, are you one of the people who has an allergy? If so, just sit down once a month or once a quarter or even once a year just to start with and have a look at your income statement that your tax accountant or your bookkeeper is preparing. Just have a look at it. Like, just dip your toe in the water. We can talk, we don't really have time to go deep into it, but I can talk about, 5 key numbers.
Please. Yeah, let's hit it.
Statement. Yeah.
Yeah.
All right. So depending on the listener's particular background, they might have been in a role before running their own firm where they're responsible for generating revenue and they've had targets around that kind of thing. So I don't want to repeat too many things they might already know here, but obviously revenue going up over time is a good thing. That's pretty key. I'd say that's key number one. But also having a look at what types of revenue are going up and down. Like, there might be multiple services that your law firm offers or multiple types of advice, or maybe there's different types of things within your particular area that you do. Like maybe it's one-off consults versus editing contracts versus giving legal advice versus mediation. Like there's lots of different ways you can use your particular expertise. And it could be interesting to see which of those is becoming more popular or which of those you're doing more often. And think about the money and time you're investing in growing all these different types of things. So maybe you're spending a lot of time, maybe spending a lot of money on ads in the local paper saying, hey, we can help you with the contracts, but your mediation revenue is actually the thing that's going up. That's important market intelligence that tells you there's an opportunity here. I need to focus on that. Or maybe you're looking at your revenue and you see that mediation revenue is going down, and it's jogs your memory that, oh yeah, I haven't put that ad in the paper that used to work. So there's like more you can do besides, yay, there's money coming in with my revenue. You can start thinking about, why is it coming in? Why is it growing? Why is it reducing? What can I do differently? What have I stopped doing that I shouldn't have? All that kind of stuff. So that's probably the big one. That's why I spent so much of our time on it.
Well, I love that, because when you print it out and you're looking at it, and honestly, I would lobby even once a month, if not twice a month, especially if you do kind of break out in hives when you think of numbers, when you think of a P&L and things of that nature. And it, to your point, when you're looking at it consistently, it's like a built-in accountability system. It's like taking your temperature where you're like, okay, I know this mid-month, and I know I got 2 weeks, 3 weeks, whatever it might be, 1 week left in the month. What can I do to pivot? What can I do to, kind of crunch the numbers, so to speak, right?
Absolutely, yes. I like the way you framed it as an accountability thing, because for a lot of people, when they start out in business, they eventually get a tax accountant sometime in the first year or two, and they need to do a tax return. The tax accountant might prepare an income statement and a balance sheet and a tax return and hand it to you. You look at it and you're like, oh, okay, right. And you just sign it. And then that's it. And so and so for most people, it sticks in their head that it's just one of those papers that they don't understand and that isn't important. But it's a very useful tool for accountability and for having a really high level overview of your business. Make sure you're not missing anything when you're busy doing client work or managing your team. So I think, reframing it as like, this is like the scoreboard for a sports team, or actually a bit more accurately, like the coach for any sports team doesn't just track actual, runs or goals, whatever your sport happens to be. Like they track things like batting average and the running speed of the particular players. And like there's a more involved dashboard there. And that's kind of what the profit and loss or income statement is for the business. If it's designed right, with the metrics that actually matter to you, not to your tax accountant or to the IRS, it can be a really important dashboard to keep an eye on your numbers on a regular basis.
And I think people spend so much time chasing new leads, chasing new revenue, chasing new money, things of that nature. And I love this because these are hidden opportunities within your practice. If you just have consciousness and awareness around it, there's money. I always tell my law firms, there's money laying all over your office. All the time. You just really, when you know your numbers and you anchor to your numbers, it's no different. I mean, the analogy, speaking into the accountability, and I know you're going to hit all 5 for us, but I think it's important to just highlight that. All right, so you make a challenge to lose 30-day challenge to lose 20 pounds or what have you. The people that hire a trainer or join a private Facebook group or pay whatever they do to be in the group, to get the challenge, to get the recipes, to get whatever, reach their goals versus a person who has no accountability around them. And they're always anchoring to that number on the scale. And that, I love the P&L of kind of using it as that, because the numbers don't lie, number one. Unless you have, that's a whole nother challenge if you are tracking it properly. And if they are lying and you feel like it, then it's a massive opportunity to go on a witch hunt, for lack of a better term, and figure out where and why, right?
Yeah, absolutely. Yes, you're right. Numbers don't lie unless, you've got a crooked accountant, but the odds of that are pretty small. But yes, it's very good to have some sort of objective number that you're tracking and have a goal that you're heading towards, like you said with the personal training accountability example.
Yeah. And sometimes, as you said, unless you have a crooked accountant, I had a law firm, I serve as their fractional CEO, and we work very closely with the accountant. And every week in the weekly team meeting, everybody was fighting over, okay, what is our projections? What's our forecast? And how much money did we reach goal this week? Did we reach goal this month? And there was always like this, like it was almost like they're ready to throw knuckles, because the one department thought one thing, the other department saw another thing. And finally I had to bring in the accountant to be like, and the disconnect is that people were basing off of emotions when they were doing the sale, and the client's like, yeah, I'm going to get you the engagement agreement, and yes, I'm going to get you the retainer. And they're like, well, no, the Smiths hired us. We're like, the money hasn't hit the bank account yet, and we don't have the retainer. But they were like, but they're gonna hire us. I'm like, no. Cash in the bank is all that matters, right?
Yes, absolutely. You can't pay your team members their bonuses if there's no cash in the bank. Yeah. Absolutely.
Yeah. So, okay. All right. Let's hit them all. Go for it.
All right. So I've got 5 different ways, 5 different types of hidden profit opportunities. And there's a few points I want to make under each. So let's roll into the first one. Reviewing your costs is it's the first one I'm going to mention because every dollar you don't spend is a dollar of profit. It's not like if you earn an extra dollar of revenue, that's not an extra dollar of profit because you got to like pay for things out of that dollar. So when you're saving a dollar on your costs, that's an extra dollar of profit. And for a lot of people, they tend to kind of accumulate expenses like software subscriptions, for example. They tend to accumulate expenses and then forget them. Like a large portion of the gym industry is built on the idea that, you know, you're only going to go for the first few weeks and you're going to keep paying them for months because you'll just forget that you've got that membership. And so going through, at the very least, and looking through your software subscriptions is pretty important, as like I mentioned. But there's a lot of other expenses, and like we were talking about, if you're looking at your profit and loss once or twice a month, you can just go through the list of expenses that are there and say, what's this? Why has this gone up? Why has this gone down? Have we forgotten to spend something? And you can go through each, maybe do this every 2 to 3 months. You could just do, spend half an hour with your accountant or your bookkeeper and say, okay, where's all the expenses? And then just look at who you're paying, what companies you're paying, what services you're paying for, and saying, do we need this? Do we need as much of this? Can we downgrade? Are there any expenses in here for old projects we're actually not investing in anymore? Or are we throwing away money for marketing that isn't actually returning anything and we just haven't been looking at it so we didn't notice? So it's important to go through that. But then like the counterintuitive idea is as you're reviewing your costs, maybe there's some things you want to spend more on that are actually beneficial for your business. Like this isn't just a standard accountant saying, go trim all your costs, be more frugal. We're looking for efficiency and effectiveness here with the costs. So maybe there is something you're doing with your marketing that's working really well. And so maybe you want to spend a bit more on that. Like, for some people, it might be Facebook ads or Google ads, and they're actually getting a good return on those ads. So maybe increase the budget. For other people, it might be like an ad that they put in the local paper once a month that always seems to get them inquiries. Like maybe put in the local paper twice a month or weekly. Like there's opportunities to spend more on things that are working. And I'm going to talk a little bit about your team later in the fifth point, but maybe there's a team member that you hired part-time or even a full-time team member you hired, and it's saved you so much time and they've been really effective and you're able to take on more work. So maybe think about hiring some more or extending a team member's hours. So reviewing costs isn't just about trimming, it's also potentially about spending more.
Yeah. Again, when you said, meet with your accountant for 15 minutes, go through this. Again, I can't say enough about building in safety net and accountability. What I have my firms do is I make them have a hardwired meeting every other week with their accountant, bookkeeper, whoever it is. And every other week they meet at same place, same time, same day of the week. It's hardwired, and they come, and the bookkeeper will do exactly what you said, where you're going over the expenses and looking at like, okay, for example, the firm I was talking about earlier, the bookkeeper found so many things when she started. She's like, why are you guys paying? Your MailChimp account used to be, $58 a month, and now it just went to $158. Well, it was a glitch, and she got the refund. She got it. Or why are you paying for 3 different Zoom webinar accounts? Well, I don't know, because Susie signed up with her email address, Johnny signed up with his email address, et cetera. And lastly is even when she's like, why is your Facebook ad spend so high, et cetera? And if the attorney was the only person who was aware of it, and the suggestion was, oh my gosh, that's crazy, looking at it as an expense versus an investment, to your point, because the team's enrolled in it and the team knows the conversion rates, and we do have the team members in with the accountant. We're not talking about payroll. We're not talking about salaries. We're talking about high level expenses, et cetera. And the team members are like, oh, no, we're not shutting that off. In fact, we're adding it, because the marketing coordinator is like, that spend is converting, 10x. So we're actually increasing that, to your point, where I always tell
Mm.
people, typically once you know your numbers, you know your expenses, you meet with your accountant every other week, people's knee-jerk reaction is start slashing expenses
Mm.
before first looking at. I'm always like, 9 out of 10 times you don't have an expense problem. Once you have this formula, like you're teaching us today, in place, you have a revenue problem. So you need to get your
Mhm.
butt, like you said, that assistant you have for $15 an hour, you can delegate 10% of what's on your desk and give her another 5 hours a week, which will hold you accountable to get out there and start marketing.
Absolutely. I love that idea of having the hardwired appointment every 2 weeks.
Mm-hmm.
Um, and that seems to be a good amount of time. I mean, that's about the period that I have between calls with my clients. And it seems to work for a lot of people. Monthly doesn't seem to work as well for taking action and remembering to keep an eye on the priorities and things like between these high level meetings, like the ones that your clients have with you, for example. I've kind of noticed that if they don't happen regularly enough, the day-to-day busyness gets very distracting and people forget about it. So I love that you're doing that 2 weekly cadence. I think it's a great idea.
Yeah. Yeah. Okay. Great.
Mm.
Okay.
So that's reviewing costs. Number two is raising prices, the one that people tend to panic about.
Yes.
And I'm going to address that one straight away, actually, with a little mental math exercise. I swear it's an easy one. But it's just usually it's a good way to make people go, huh, and take away some of that fear about raising prices. So um, I did this little calculation one day as a way to illustrate to a client that it's totally okay to scare off customers with a price rise. So imagine that your revenue is, that's for the sake of simplicity, we'll say it's $1,000, whether that's
Okay.
daily, weekly, whatever. Let's say we've got $1,000 and you double your prices. So in theory, that's going to make your revenue double as well from 1,000 to 2,000. Great. Except that, let's say you scare away 50% of your client base, like half of them, dramatically huge number, half of them disappear. Now your revenue goes back down to 1,000 again. So you raised your prices, it doubled to 2,000, you scared off half your customers, you're down to 1,000 again. And at this point, you want to shoot me for the emotional roller coaster that you didn't need to go for a ride on. um, but then I point out that, yes, your revenue is exactly the same, but you've got half as many clients. So your costs, your time, your team size, and therefore your business complexity, all of that is dramatically lower. And so you've doubled your prices, lost a huge amount of your customers, and your profit's actually gone up. There's lots of different ways you can do this calculation based on how much you're going to raise your prices. Like most people won't double them. I can sometimes convince people to, but usually it's like, let's just raise them 10% on the next potential client meeting you have. But you can do it with small things. So if you imagine raising your prices 10% and some small percentage of clients leave or disappear, you can still be more profitable if you scare away people with a price rise because there's less for you to do, less moving parts in your business, all that kind of thing. So whenever people are afraid of raising their prices, that's the example I give them. And I've got a blog post which has different price raise amounts and different gross margin amounts and works out what percentage of clients you can afford to lose. But that's the basic concept.
Oh, great. We'll have to go and look at that blog and check that out. And maybe you could give us a title and I'll put it in the show notes. If you could email me over the link, I'll put it in the show notes.
Will do.
As well. Okay, great. So, I agree with you. It's scary to raise your fees, but that's always, in my experience at 25 years of coaching law firms, that's the last place that people will go. They'll just work harder and harder and harder
Yes.
to bring in more clients, to hire more staff, to have more frustration and aggravation. And you weed out the weak when I tell firms, go ahead and raise your fees by $500 or what have you. they'll like go start looking at their competition, start freaking out. And it's
Mm-hmm.
like you have a value proposition conversation. It's people typically, don't hire you. It's not necessarily because it costs, it's because you're not communicating the value. And to your point, you'll have less cases. Yes. And you are going to go through a little bit of roller coaster. But in my experience, when when attorneys really charge what they believe they're worth and what they want, and they know how many cases they want to bring in a month, and bring in a week, bring in a day, whatever it might be, is that you weed out the weak, and you find that your team is you're more happy. You love your clients because
Mm-hmm.
you attract clients that match your vibration. You attract clients that have the same core values of you that you have. You're that so often people will complain about their clients and just the caliber, and how we have all these bad clients, and blah blah blah. And I'm like, you don't have bad clients, you have a pricing problem.
Yes, absolutely. Cheap clients are painful clients.
Yeah.
Yeah.
Yeah. You're wishing for Lexus clients, but you're hanging out on the Kia, car lot.
Yes, I like it. One other thing I want to say about raising prices is it doesn't necessarily have to be actually raising prices. I found that people can still achieve the same effect by stop discounting or writing off so much. It's effectively the same thing, but it's less nerve-wracking for some people when I tell them to do that instead of raising their prices. I found that, like, with a lot of accountants and a couple of lawyers I've talked to, they would write off their billings down to a nice round number. And I added it all up for one particular lawyer. It was only a small firm. It was him and an assistant. I said, okay, let's just have a look at this rounding thing you're doing. How much is that costing you every month? And it was $10,000.
Oh, wow.
And I said, stop immediately. It's that, like, there's some other habits like that people have that get them through that uncomfortable feeling they have when they push the invoice button. They might round it down a little, or they might, just edit the number and not even tell the client that they've given them this nice discount. Like, I mean, if you're going to discount or write off, build goodwill from it by telling your client that you're such a nice person. At least get some benefit from it if you're, stealing money from your mouth from your bank account. So yeah, that's another way you could raise prices without it. One thing I do want to mention, though, is that sometimes you raise prices and you might need to change the type of clients you aim for or the types of services you offer, because, like, the local area some people are in, they might not be able to afford the higher prices. And so you might need to start doing a little bit outside the local area, or finding some other ways where you can raise your prices, even though the type of clients they've been aiming for wouldn't necessarily pay that. I mean, most of the time, if you think your clients wouldn't pay it, you're probably wrong. But there's a small percentage of the time when they're actually right. So I figured I should address that one.
Yeah, I love that, because I actually have a firm that charges an initial consultation, and their client service coordinator, when we start looking at their metrics, their tracking and everything, the client service coordinator said, okay, we had, say, 10 potential new clients call in this week, of which 2 scheduled consultation next week, 1 scheduled consultation next week, 3 scheduled consultation. I'm like, time out. You guys are 100% referral based law firm. They do very little marketing, very healthy, very successful. I'm like, what's the objection here? And the client service coordinator is like, well, the initial consultation fee is too high. I'm like, what is it? They say it. And I'm like, ooh, that is really high. That's like double what most law firms are charging. And the attorney says, you know what? I've often thought that our fees too high, and I wouldn't pay that. I'm like, okay, so you wouldn't even pay yourself that. You know that it is way too high within, but the interesting thing is that their fees were too low. So we took the initial consultation to where it was, and then took the money that we chipped off on the initial consultation and just increased it on the fee. Because once the attorney could get someone in the conference room or the Zoom room and close them, she was phenomenal. They loved her. Her closing rates were phenomenal. Like, you have to build that like no and trust rapport. You have to build the relationship with them. And sure enough, but I said, where in the world did you get this number from? And they said, well, I don't know. We had a coach at one time who told us that's what we should be charging. Like, oh, okay. So, but to your point, yeah, sometimes you got to know your marketplace without comparing yourself to your competition. And you have to believe it in your bones, because if you don't believe it, then that is subconsciously going to communicate to your existing and prospective clients.
Absolutely. And I like that approach of, for that particular client, that the attorney was fantastic at closing the deal when they got someone in the door. So the barrier for their business growing was they needed to get more people in the door. And so I like that process you went on to try and find out what the roadblock that was there. I think it's good. All right, shall we go through number 3? And I might bundle in number 4 with it, because they're kind of similar.
Okay, sure.
But in different ways. So we've talked about raising prices, and that's kind of about helping your revenue. And here's 2 more that are about helping the revenue. Number 1 is what I call order size. So when people spend money with you, increasing that amount by adding other things for them to pay you for. So bundling more services. Depending on where you are in the world, there's going to be regulations on white labeling other services, or how you structure these extra things that clients will pay you for. But like there are extra little services or a premium experience that you could potentially charge people for. Just thinking about ways where, without raising your prices, how do you get them to spend more money with you each month? Can be an interesting way of increasing your revenue. And if you talk to your clients, just ask this simple question: is there anything more that we could do for you? Like, are there any other legal gaps in your life? What else do you need? Even just having a conversation like that with 5 or 10 clients or potential clients can actually unearth some really interesting and profitable new services, or just changes in the way you do things that would allow you to raise your prices. Like, it's a very interesting conversation to have.
I'll share with you one model that my law firms have been doing very, very successfully, is creating what they call like a maintenance program, which is very much like a warranty, where, there's a phenomenal book called The Membership Economy. And if nothing has taught us that, it's been Netflix, it's been Hulu during this pandemic. I would love to see their growth margins, but paying that monthly fee. So a lot of our clients will do VIP members only maintenance program, where you pay X amount of dollars and you get access to the bat phone, so to speak, where you can come in and we will update your documents. Or we will do a well check appointment for you and look over and give you legal advice up to a certain point. And it's very descriptive, where they do an annual party, they make a signature event, whether it be a baseball game in June at the minor leagues for whatever town they're in, or whatever it might be, a Thanksgiving, pies and pints of event. And it's worked beautifully, where you have that reoccurring revenue without very little additional overhead, and not having to raise your base fee for your initial purchase.
Absolutely, yes. And so that's point number 4: selling again to people. How can you sell more often? And I love recurring revenue. I'm a massive fan of recurring revenue, and I mean, it's nice knowing that more money's going to come in, so long as you don't screw it up. You don't have to go out there and hunt and kill. You don't have to go out there and find more revenue every single month. Like, you're not starting from zero every single month. So it's a big change to the way you think about your business. It frees up a lot of brain space to do other growth projects, or, when you do bring on a new client, it has a massive difference to your business, because it's not just like, a one-off $1,000, $10,000, $50,000 consultation or whatever. It's then, tens of thousands of dollars for years and years and years. And that also allows you to spend more time and energy acquiring each client. And so, like, you can spend more on Facebook ads than other attorneys in order to acquire a client, because you're going to earn more revenue out of that client over time. You can spend more time wooing potential clients, like going to networking meetings and, having coffee or lunches with people. Like, you can spend a lot more effort in getting more clients, as well as a lot more money, because you're going to make a lot more money from them later. And that will enable your business to grow a lot faster, because you're spending more time and money on getting clients. You're probably going to get more clients.
Yes.
Also, I like your idea of maintenance. That's a big deal. Like, regularly updating things is pretty important. So I realized that I'm just looking at the clock and thinking we better move on to point number 5.
Please. Yeah.
So point number 5 is productivity, which has nothing to do with your income statement on the surface of it. Nothing to do with cash on the surface of it either. For a lot of professionals like doctors, lawyers, accountants, I don't need to tell them that it's important to do a lot with their time, because they're all filling out timesheets, and they have been for a while. Like, they know this. But it's still, like we were talking about before we started recording, it's still something we should definitely touch on, because if you're paying your team a certain amount per hour or a certain amount per month, and they do more for you, that's almost like hiring an extra part-time person and not paying them. Like, I mean, what could you do with your business if you're able to hire another part-time person but not pay them? I mean, that's, a fantastic opportunity. So increasing the productivity of your team can be really, really helpful for increasing your profits, because you're getting more done with less cost. But it's also about personal productivity as well. There are things that only you can do as the owner of the business. There are things that you are really well suited to. You can't send your assistant or your receptionist out to go get more clients. Like, you have to protect your time from the things that anyone can do, and make sure that you focus on the things that only you can do, the things that will grow the business. So there's a quick framework of, just look at every task you're doing, or look at every task a team member is doing, and just think to yourself, does this need to be done? Can I eliminate it? If it does need to be done, can I automate it, get some software in to save us some time? Could I delegate it, or could the team member delegate it just to someone that's cheaper, or who, doesn't have these other skills that you need to free up time for? And then if it can't be eliminated, automated, or delegated, you just set yourself a small amount of time, or set your team member a small amount of time, so they just focus on getting the result and they don't blow the task out of proportion. And if you go through and do that for yourself and your team, that's another way you can increase your profitability.
Absolutely. I love that, because attorneys are conditioned to track their time, right? Track their time, their team time. But a lot of times they look at it from a place of how they can bill it against a file or bill it against a client. What's billable work? It's often that they pay attention to the billable hours versus, even for flat fee firms, but they don't look at it, to your point, from a place of profitability and production, because so often, like this week, I was speaking with a firm where they have a paralegal that bills out at X an hour. They have the attorney that bills out at X an hour. But then when I started having them track their time for non-billable stuff. It was extraordinary how much the attorney was doing basic receptionist stuff. I mean, to the point where it was like 7.5 hours a week consistently. We had her track her time for 3 weeks. And that was an eye opener for the attorney, where they're like, holy smokes, like I could delegate, set a full day's worth of work to you. So that'll free me up to be doing more podcasts and different revenue producing and opportunity producing activities. So I love that from, there's one thing of tracking time from a place of billable, but there's also a piece I think so many people miss, to your point, from a place of production and profitability.
Absolutely. And for those people who are filling out a timesheet, those attorneys that are filling out a timesheet, not for their team, I remember way back when there was some training session I went to about how to actually run your accounting practice as a business, which blew my mind. I'm like, yes, we should have more of this. And they said something to the effect of, it's good to have like a minimum billable percentage for your team, but you should have a maximum billable percentage for the people who can go out and get clients, or, for the partners. Because if they're spending too much time on billable stuff, then they're not going out and getting clients. They're not managing their team properly. They shouldn't be spending the non-billable time on admin stuff. That's for sure. They should delegate that. But getting clients is very much a non-billable thing. And if they're spending all their time doing billable hours, which, as you say, they're conditioned to do, then the business won't grow, or won't grow very fast, even if they're getting referrals. Yeah.
Indeed. I love that.
And
thank you. Yeah, go ahead.
Sorry. One other point I want to touch on with productivity is making sure to hire people before you get too busy to hire them.
Oh, yes.
So, I talked in the framework about delegating. So it's pretty important that you are able to put someone in a position where you can delegate them to. So always thinking ahead, making sure that you do start the hiring process, which can take 2 to 3 months sometimes before you just decide you want someone to when they're actually up to speed onboarded in your business. So yeah, just one other thing I want to mention is keeping an eye on, am I going to need someone 2 to 3 months from now? And are the people on my team the right people, as well as the other thing? So you can't polish I'm going to say polish a turd. It's the saying.
Yes. I heard that. I love it.
So make sure you got the right people on your team as well. That's another hidden profit opportunity. So that's the 5: reviewing costs, raising prices, order size, selling again, like recurring revenue, and productivity.
Yeah. Oh, fantastic. I love that last statement about really making sure that you project, knowing that the hiring process is 3 months. No question about that. And number 2 is also, again, I'm going to say it, it's about accountability, because if you hire someone when you are at that tipping point and doing an analysis of the people that are on the bus, so to speak, there's a phenomenal book called Good to Great that talks about that, by Jim Collins, and another one, which is First Among Equals, 2 of my favorite books in regards to both of those subjects. Making sure you have the right people on the bus, number 1. And then number 2, really making certain First Among Equals is really talking a lot about that delegation, automation, profitability, production that you're speaking about. But I'm going to go back to the accountability. I love your 5 steps, because if you built in safety nets and accountability and enroll other people, your bookkeeper, your CPA, your marketing team, your weekly team meetings and things of that nature, looking at our hours, billable and non-billable. And I really want to encourage everyone to put in that measurement that you added there. Sales and marketing, you need to start tracking and making sure, especially somebody in the firm is spending 80% of their time there. Because that's what's going to keep it like a well-oiled machine for you to get new opportunities. And then when you hire someone, even when you're, so often attorneys will be like, we're slammed, but I don't think this is going to be normal. I'm like, no, declare it's going to be normal and hire someone right now, because then that holds you accountable to be spending 80% of your time as an entrepreneur, the marketer, and the sales force, and delegate, like you said, and automate the rest. I love that.
Absolutely.
Oh, well, thank you for being our guest today, Ben. And I really want to encourage everyone. I'm going to have it in the show notes. I'll add the blog that we spoke about just earlier that you're speaking. Go to profitscollective.com. And I highly encourage you to take advantage of the free download there that walks you step by step through the same exercise that Ben has used to find thousands in extra profit for many of his clients that are very, very similar to you all as attorneys, CPAs, whatever. You're all in the personal and professional services industry. And so I highly recommend you go there. It's right on his homepage. Enter your name and your email, and you can get that. And I'll put reference to the blog. And I really want for you guys to see and read and adopt this strategy of how he has really been able to take clients from the red to $100,000 profit. You can see the testimonials on his website. And don't gloss over anchoring to these 5 tips. I know you think you have them, and you might have some, you might have all, you might have none, but do an audit and go back and start from beginning and really do an analysis on each one of these steps and get them into the fabric of your practice of evaluating them weekly, bi-weekly, monthly, quarterly, and annually.
Absolutely, Molly. That's a fantastic summary. Thank you. Been a pleasure to talk to you.
Indeed. Yes. Oh, thank you for being our guest. And we would love to have you back. And listeners, please reach out to us and let us know how you do with these 5 steps.
Absolutely. I'd love to hear any successes. If they have any challenges doing it as well, like pop a comment on your blog or something, I'm happy to come back and give them some tips.
Great. Oh, fantastic. Okay. Until next time, this has been another episode of Hiring and Empowering Solutions podcast. You can check us out at www.hiringandempowering.com. We're so grateful for our guests today, Ben. Thank you for being here. And again, we're going to have in the show notes the blog and the website, profitscollective.com. Right on the homepage. It's straightforward, simple, easy. Download the free download there and get this step-by-step process.
Thanks for having me, Molly.
Thanks for being with us.